Welcome to today's session. So today we are going to discuss about tax audit. Okay. So you guys have a chapter in your paper 4 about tax audit, chapter number 20, that is tax audit and ethical compliance. So in tax audit, what we are going to discuss, we'll have a understanding first on that, and then we'll proceed with the chapter and the content of the chapter. Okay. Now, you have already gone through various provisions of Income Tax Act. Okay. You have gone through the various provisions, various compliance regulations, rules of the Income Tax Act. So you are familiar with that. That is sure. Now, when it comes to the auditing part, so being an auditor as a chartered accountant, once you go, okay, let's say after becoming a chartered accountant, if you get an assignment for the tax audit, okay, so once you get that assignment, it's your responsibility to understand whether the provisions which are there under the Income Tax Act, okay, have been complied by the assessee appropriately or not, or what is required to be reported as per those provisions. Okay, so if I start with, let's say, for example, the criteria of the tax audit itself, okay, the turnovers in section 44AB. Now, till the time you are not aware that how to calculate the turnover and what basis the turnover should be reported, you won't be able to decide whether the tax audit is applicable to that person or not. Same way, there are numerous different reporting requirements under Form 3CD that we will see. Okay, under those clauses of Form 3CD, there are different reporting things, reporting requirements. Now, in those clauses, we are not only required to understand the provision which you have already done, by understanding the Income Tax Act, but we need to apply some portion of auditing. We need to apply how to audit the things that we are going to report in that particular form. Okay. Again, so you need to be aware of two things to understand how tax audit works. Number one, the basic understanding of income tax provisions, which will be part of your various clauses. So once we will go clause by clause, over there it is required that you should have the basic understanding of those clauses, or basically those provisions which are dealt by the clauses. Number two, understanding of how the audit is required to be done. So here our major focus will be on how we need to gather that information to validate whether the reporting which is done is appropriate or not. Okay. During the session, if you guys have any doubt at any point in time, okay, I would suggest just post your doubt through the app, through mobile app, through portal, or wherever from you are looking from. Okay, you post your doubt, and once I will receive your doubt, either once I complete a particular topic or I get the appropriate pace to take that particular doubt, I'll take it up, or before the break or before end of the session, I'll definitely take up your doubt. Okay, but I want maximum participation from your side, without which it is the more doubts you will ask, the more questions you will ask, the more understanding you will gather about the topic. Okay, so let's start. So when I talk about tax audit, basically, okay, tax audit and ethical compliance, I am talking about the audit which are done, audit reports which are prepared, certifications which are done under the Income Tax Act. You have section 44AB. There are other provisions also. Section 12A1B, okay, for the trust, which requires audits of account, okay, in Form 10B, 10BB. So, if I just list down certain provisions which requires audit or certification, okay, it goes to let's say section 44AB, okay, section 12A1B, okay, which is again very important. Then section 80 double J double A. Then you have a section 115 JB, and that is basically for the companies. Okay, because every company to which the provisions of minimum alternate tax are applicable has to furnish a report under Form 29B from a chartered accountant certifying the correctness of the computation of books of profit. Okay, same way it is for the 115 JC. Okay, then you have a section 50B in case of slum sale. Okay, now these are the sections, okay, wherein various, you can say, either reporting requirement, either certification requirements are enumerated in the Income Tax Act. But these sections also prescribe certain way of reporting. Like this is the form that is required to be used for reporting purpose. And those are in section 44AB. Okay, we have form 3CA, 3CB, and 3CD. For 12A1B, okay, for 12A1B, we have form 10B, 10BB. For 80JJAA, we have form 10DA. Okay. For 115JB, we have form 29B. For 115JC, again, we have form 29C. For 50B, we have form 3CA, 3CEA. Okay. In the same way, you are again, there are other provisions where you have form 15CB also. Okay, where in case of a remittance, you require a certificate from a chartered accountant. So basically, it's a very important area. Okay, because our certifications holds a value. Okay, our certifications holds a value, holds some, value added, a kind of assurance. That's why these certification from chartered accountant or reporting from chartered accountant is required. So there is a case which additional CIT versus J engineering. Okay, now this particular case is the one which indicates that, okay, extent to which the income tax authorities place reliance on the audit report. So it's a 1978 case, very important one. Okay. So additional CIT versus J engineering works, whereas it was, it was quite competent for the income tax authorities to accept the audit report and to draw inference from that. Okay. And where in that particular case, the original books were destroyed by the fire, and it was held that in allowing a deduction, materially, we can rely upon the auditor's report. So that kind of reliance is placed on the auditor report, basically. And as a result, when we are issuing such kind of reports, it's our duty to understand what are the requirements that we need to fulfill while issuing the report. During this particular, understanding of form, I will also draw various references to the essay which are there, which we have seen in paper 3 already. Okay. For example, SA 230, documentation. Okay. We have SA 315, risk assessment, understanding the business and its environment. So we need to, perform the audit, but with the same concept that we have seen already. Okay. Now, failure on our part of performing an appropriate audit, okay, could lead us to be guilty of professional misconduct. If there is any failure, let's say tomorrow, if you are not able to perform appropriate audit, there could be a failure on our part could lead us to be guilty of professional misconduct. Okay, under clause 7, part 1, second schedule, and clause 8, part 1, second schedule. Under both, if you see, where one we talk about being grossly negligent, okay, and second we talk about if we fail to obtain sufficient information. So that's why it becomes again very important for us to understand the requirement first, and invest time in that, and then we need to do appropriate reporting accordingly. Okay, any doubt till now? Any doubt? No. Okay, so just as a part of penalties, penalty for furnishing incorrect information, okay, by an accountant. That is section 271J, which talks about if, okay, if any information that is furnished is an incorrect information in any report or in any certificate, okay, which talks about any report or any certificate, if there is an incorrect information furnished under the provisions of Income Tax Act or rules, incorrect information under act or rules, in that case, the quantum of penalty for each such report, each such certificate, is rupees 10,000. For each report slash certificate. And this penalty is applicable on the accountant, like chartered accountant that I am talking here. Okay. Yes, Mansha, there are prescribed. So you might have already seen and discussed in the earlier lectures with respect to the political party. Any doubts, guys? Till now, any doubts? Okay. If no further doubts, let's proceed. Now, let's talk about this is just background about the tax audit. Now, let's talk about basically tax audit under section 44AB. Can anyone tell me what are the limits that are prescribed for section 44AB for the tax audit for total sales or turnover gross receipt in any previous year? So what are the limits that are prescribed under section 44AB? Can anyone tell me if they have read the chapter or if you have gone through the section itself? Total sales slash turnover or gross receipts. Anyone? What are the limits that are there under section 44AB? Correct, Mancha. Very good. Anyone else? No? Okay, I'll tell you. So, usually the limit that is prescribed under section 44ABA, okay, that is every person. Now, that is applicable for every person. The limit is 1 CR. Okay, just a minute. Okay, the limit is 1 crore rupees in any previous year. Now, that is my section 44AB, 44AB, A. Okay, but there is an proviso to section 44ABA which says that, okay, if aggregate of all received amount received, including the amount received for sales turnover during the previous year, does in cash does not exceed 5% of the said amount, and all payments made expenditure, okay, in cash does not exceed 5% of the said payments, then the terms, okay, then the words of 1 CR, okay, will be counted as a 10 CR. So, proviso says that if total receipts in cash are less than 5%, okay, of total receipts. Okay, so receipts in cash are less than 5% of the total one, total amount received. Plus, if total payments in cash less than 5%, okay, of total amount paid, okay, total amount paid, then in that case, the limit of 1 CR will be 10 CR. So the words 1 CR will be counted as a 10 crore rupees. Okay. So that is the provision to section 44 ABA. And for the professions, that was for the business, carrying on the business. This sales turnover gross receipt is for business. Now let's come to the profession. For the profession, person carrying on, every person, again, it talks about every person. Now every person carrying on the profession, if the gross receipts in profession exceeds rupees 50 lakhs in any previous year, then that person is required to get the account audited. Okay. Now that is section 44 AB B. We have different other categories also for the tax audit. Okay. That is, if a person carrying on business, okay, and if the profit and gains are deemed to be profit and gains from of such person under section 44 AE, double B, triple B, and he has claimed income lower than the deemed profit, okay, and he has claimed income to be lower than the profits deemed to be the profit and gains of his business, then in that case he's required to get his account audited. So this is specific for section 44 AE, 44 BB, and section 44 triple B, deemed income. Okay, and the criteria is that your income is lower than profit and gains deemed to be profit and gains of the business. Then if your income is lower than the profit and gains deemed to be profit and gains of that business. Okay, so whatever conditions are there under those sections for calculating the deemed profit, if you are claiming less than that, then yes, you are required to get this account audited. That is again your section 44. Just keep it down. 44 ABC. Okay. Why I'm explaining these sections, okay, subsections of section 44 AB, because again, that will have a relevance when we'll discuss Form 3CB. Okay. Then, very important one, that is 44 ABD, which talks about your profit and gains under section 44 ADA. Okay. If your profit and gains, okay, which you have claimed under section 44 ADA, lower to be the deemed profits, and your income exceeds maximum amount which is not chargeable to tax, then you are required to get your account audited. Section 44 ADA, okay, deemed income. So the condition says that profits lower than deemed one plus your income, okay, exceeds the maximum amount which is not chargeable to tax. Income exceeds maximum amount not chargeable to tax. If these both conditions satisfy, then yes, you are required to get your account audited. That is section 44A-B-D. Now comes the last part, that is section 44AD related auditing. Again, under section 44AD, if you are claiming your income and if section 44AD4 is applicable, AD4 is applicable plus again your income exceeds maximum amount not chargeable to tax. In that case, again you are required to get your account audited. 44ABE. Okay. But now, if I go back to section 44ABA, which is business, okay, or or any other provision over here, and let's say, for example, person is claiming income under section 44AD. If a person, let's say, for example, I'll give an example. Mr. A is claiming the total receipts under section 44AD, okay, rupees 1.5 CR, 1.5 crore, okay. If Mr. A is claiming the total receipt under section 44AD, 1.5 crores, okay, in that case, is section 44AB is applicable? If a person is claiming, okay, income under section 44AD, and the total turnover that he has disclosed under section 44AD is more than 1 CR, let's say 1.5 CR, is he required to get his account audited under section 44ABA? Because ABA says that if your gross receipts exceed 1 CR, then you are required to get audited. Let's say, for example, the proviso is not applicable in the current scenario. Okay, we hypothetical example, we understand that the proviso of 5% is not applicable. Okay, and he is ready to show 8% deemed profit of 1.5 CR. He is not showing 6% because he has a cash transactions, something like that. So he is ready to show 8% of 1.5 CR. Still, is he required to get his account audited under section 44 ABA? Good, Mancha. Very good. Come on, guys. Come on, quickly. This is a part of amendment. Come on. Scenario after the amendment. After the amendment by Finance Act 2023. Okay, that will be with effect from 1/4/24. Okay. Now, after the amendment, the current situation is that this the particular section of 44, the 44AB section 44AB will not apply or shall not apply to person, okay, who is declaring profit and gains in previous year. Okay, who is declaring profit and gains for the previous year in accordance with section 44 AD 1 or section 44 ADA 1. Okay, so if a person is declaring profits and profit and gains for the previous year in accordance with the provisions of subsection 1 of 44 AD and subsection 1 of 44 ADA, then in that case, this particular section of 44 AB will not be applicable to that person. Earlier, the limit before the amendment, it was 2 CR for the turnover for person who is claiming profit under section 44 AD. But now 44 ADA has also been brought under this purview. Okay. So that is a change after the amendment, you can say. In this whole scenario, we are talking about, various conditions. Various conditions where the person is required to get his accounts of such previous year audited by an accountant. So here we are talking about the term audited by an accountant and to be furnished before the due date in a prescribed form, again duly signed and verified by such accountant. And for that we need to understand what is accountant. Now the term accountant is as per section 288(2) of Income Tax Act. So under section 288(2), okay, the term accountant has been explained in detail. So if you go to the explanation of section 288(2), which is, appearance by the authorized representative, over there, the term accountant means charter accountant defined under clause B of section 1 of section 2 of Charter Accountants Act. Okay, holding a validate COP again under section 6 of the act. Okay, but some exclusion, with some exclusion. So to summarize, right, charter accountant plus holding COP, certificate of practice, okay, will be a accountant subject to disqualifications, Now disqualifications are divided into categories, one for the companies and one for the other cases. For companies, it is pretty much straightforward that disqualifications enumerated under section 141 subsection 3, okay, of Companies Act. If you go to section 141 subsection 3 of Companies Act, you will get disqualifications for the statutory auditor. Over there, whatever disqualifications are there, the same are applicable for the accountant in case of income tax audit, tax audit. For any other case, there are various conditions which are prescribed. Let's say, for example, for firm HUF, AOP, okay, for firm HUF, AOP, any partner of the firm or member of the association. So, partner or member. Okay. For trust, you have a person specified under section 13(3) A, B, C, okay, and double C. 13(3)A, 3B, 3C, and 3CC means clause A, B, C, and double C of subsection 3 of section 13 of Income Tax Act. Okay. For other person, you have person who is competent to verify return under section 139 and in accordance with section 140. So if a person who is competent to verify the return, he will be disqualified. Okay. Or you can say there are other conditions also which talks about officer or employee of assessee. He is disqualified. Okay. Then partner who is or a person who is in employment of an officer or employee of the assessee. So partner or who is employment or who is in employment. But with whom? With officer or employee of the assessee. Over here. Who is in employment with officer or employee of the assessee. Then you have individual or his relative. Okay. Individual or relative holding security for individual, holding security. Okay. Now for the relative, again, relative has a limit for holding security. The limit is 100,000 rupees. Okay. Means you have 1 lakh rupees for, okay, relative holding security. Then another condition for the individual is in debt to the assessee. But for the relative, you have a limit. For the relative, again, 1 lakh rupees. Then is a guarantee. Again, you have a limit for the relative. And the limit is that a relative may give a guarantee and provide any security in connection with the indebtedness of the third person, but again, not exceed an amount of 100,000 rupees. Okay. Then, person having direct indirect relationship, business relationship with assessee. Okay. Then the last condition is person who is convicted by court, okay, for of an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. Convicted by court for fraud and 10 years have, has not elapsed, okay, from the date of such conviction. So this is a criteria for the disqualification for accountant under section 288(2), okay, with respect to for any other cases. For the companies, it's pretty much the one that we have discussed. Any doubt till now? Mansha, here we need to see, okay, with respect to the period starting from 1st April 2024 in case of this particular amendment. Okay. So here, if we have to seek for the turnover, we need to seek the turnover of that particular previous year for the audit. If the turnover for the audit, if the turnover is more than 1 CR, okay, and the person is not going under section 44 AD or ADA in that particular previous year, then yes, he is. Yeah. So as I was saying that you need to check the turnover of the previous year, not the preceding previous year. Any doubt till now? Any doubt? No? Okay. So the term turnover and the term gross receipts, we need to understand those terms also in detail, to have a clear understanding how to calculate these terms. Sales, turnover, gross receipts. Okay, we need to understand these terms. Basically, when I talk about, okay, uh, the term turnover, gross receipts, and sales, there are few things that we need to understand. Okay, I'll line by line I'll place the items and then we'll discuss. One, discount, or you call them as a trade discount. Should we deduct trade discount from the term turnover? Should we deduct the discount while calculating the turnover? Should we reduce the turnover or sales with the discount amount? Come on, guys. If then we have a cash discount. I'll just place some items over here and then we can discuss one by one. We have a certain terms like turnover discount. We have special rebates. Then we have goods returned. Then you have sales proceed or amount from sale of fixed asset. Okay. Same way, you have sale proceeds by property held as investment property. Then you have a sale proceed from sale of uh, share, securities, debentures, okay, etc. Held as an investment. So, do you think these will form part of turnover? Am I required to deduct this from turnover, or will these form part of turnover? Come on, guys. One by one. Trade discount. Should I deduct it from turnover? Yes or no? I will deduct. Yes, it will be deducted. It will be deducted from turnover. Cash discount. Trade discount because it is written on the invoice. Yes, we will be deducting trade discount. Cash discount? Answer is no deduction. Reason because it is not on invoice. Okay. So no deduction from turnover or calculation of gross receipts or sales. Turnover discount. Turnover discount usually yes, it is deducted. Special rebate. Generally special rebate if on invoice, then yes, else no. Okay. If it is on invoice, then yes, you can give a deduction from the turn or sale over sale calculation. Otherwise, no. Goods return by default, we take the net sales. Answer is yes. Sale proceed from sale of fixed asset. It will not form part of sales. Again, sale proceed from sale of property as an investment property, not form part of sales. Sale proceed from sale of shares, debentures, securities held in investment. Again, not form, will not form part of sales. Clear? Any doubt till now? Okay. So, any doubt? Repeat the amendment. Okay. See, earlier there was a limit where this section 44AB was not applicable with respect to section 44AD. Means if a person is claiming benefit or if a person is claiming income deemed to be income under section 44AD, then section 44AB was not applicable, but there was a limit of 2 CR. After the amendment, that limit has been done away. Now it is straightforward that section 44 AB will not be applicable. Okay. If a person who is declaring income or who is claiming income under section 44 AD1 or ADA1. Okay. So the limit has been done away with. Okay. And now there is this direct one that, okay, if a person who declares profit and gains for previous year in accordance with section 44 AD1 or 44 ADA1, then this section, that is section 44 AB, will not be applicable to that person. So if you are claiming income under section 44 AD or ADA, then section 44 AB will not be applicable. That is a basically amendment. I hope I am clear. Any doubt till now? Any doubt? No? Okay. If no further doubts, then let's proceed forward and let's jump to a very important topic. That is, now we have discussed about the turnover, we have discussed about all these things. Now we will discuss about the first category. We have discussed about section 44 AB. Now we will discuss about form 3CA, 3CB and 3CD. Because that is the main core important point that we need to understand, that how and what is required to be reported. So let's go for Form 3CA and 3CB first. Can anyone tell me what is Form 3CA and 3CB? What we are required to report under these two forms? That 3CA and 3CB. What we are required to report under these forms? Can anyone tell me that? Come on, guys. What is the difference between Form 3C and 3CB? And what these form contains? Anyone? Okay. I'll tell you with the form. I'll show you the form and we'll discuss accordingly. This is Form 3CA, which is prescribed, okay, under Rule 6G1A. Okay. Now, when this is applicable where audit report under Section 44AD of Income Tax Act is required to be furnished, and the case is where the accounts of the business or profession of a person have been audited any other law, like have been audited under any other law. So when I talk about this particular thing, that they are audited under any law, that means another audit may be under Companies Act, okay, can be under Companies Act or LLP Act, or let's say if it's a cooperative society, okay, then Cooperative Societies Act, whatever state law is applicable, okay. So if any audit is required to be carried under any law, any other law, not only limited to the Companies Act or whatever I have written, but any law, okay, etc. In that case, Form 3CA will be used. And if you see the wordings over here, the wordings is I or we report. I is applicable for the individual charter accountant and V is applicable for, okay, if it is a firm. IV report that the statutory audit of measures in the name of the assessee, let's say for example, XYZ Limited, okay, address of the assessee with the permanent account number is required to be given over here. Conducted by me, us, or measures. If it is a firm, then accordingly, me or us will be there here. In pursuance of the provisions of that act. Now, whatever act is there, for example, Companies Act, okay, 2013, and I or we annexed here to a copy of audit report dated this along with a copy of each this particular thing. Now, there is one more thing over here. If, let's say, for example, in case of a company, okay, if stat auditor is ABC and company and tax auditor is DEF and company, in that case, here the name will be of ABC and company. That this particular audit was conducted by Messrs. ABC and Company in pursuant of provisions of Companies Act, and we have annexed here to a copy of their audit report, dated whatever date will be, along with a copy of each of the audited P&L, or if it is income expenditure is applicable, then income expenditure for the period beginning from 1/4/2022 to ending on 1/4/2023. These are just example, or sorry, no, 31/3/23. Audited balance sheet as at 31/3/23, and documents declared by the said act to be form part of the annexed profit and loss account and balance sheet, means other statements. For example, statement of changes in equity, statement of cash flow, all these things which are declared by the said act. In our case, in this example, I'm just discussing about the Companies Act. Okay. And the statement of particulars required to be furnished under section 44AB is annexed herewith in form 3CD. So some additional form 3CD reporting. Now, then in my or our opinion, and to the best of my or our information, and according to the explanation given to us, okay, of books of account, including other relevant document and explanation given to me, the particular givens in the said form 3CD are true and correct, subject to the following observations. See this particular in word. Very important. We are using true and correct, not true and fair. No, true and fair is not there. It is true and correct. Both are different. Both are different. Okay. So when I say true and correct, I need to be 100% sure. I need to give a kind of an absolute assurance with respect to the particulars. Now, the true and correct is with respect to the particulars given in form 3CD. So the term true and correct basically is working for the particulars given in form 3CD. I have to be absolute. I need to give absolute assurance with respect to those particulars. There is no reasonable assurance kind of thing in that. And if any qualifications are there, then these qualifications are to be reported here. Then you have a signature, name of the signatory, full address, date and place. That is pretty much common. But along with this, you need to have your membership number, FRN, plus UDIN. Because if you see here, it is written that indicate shall refer his membership number, certificate of practice, authority under which he is entitled to sign. So membership number, FRN, and UDIN. Okay. Clear? Any doubts? Okay. Now, there is one doubt that in section 44 AD, the term which is used is any previous year. Okay. So the any previous year with respect to the previous year. So see, it is applicable for all the previous years. Okay. Now, if in any previous year you are exceeding the limit, then you are required to get accounts audited of such previous year. If you see the wordings after all the clauses of section 44AB, after clause E, you will get his accounts audited of such previous year in which the limit is exceeding or any of the clauses applicable. So you need to check the turnover limit. You need to check the conditions in all previous year, but in the previous year in which those terms and conditions are getting applicable, those limits are getting, those thresholds are getting, crossed. For that previous year, you are required to get your accounts audited. I hope I'm clear with the. I hope I have answered your query, Mancha. Any further doubt with Form 3CA or any other doubt with respect to any of the area till now, whatever we have discussed? Okay. Let's now go to Form 3CB. Form 3CB is applicable, okay, as per Rule 6G1B, which says that audit report under Section 44AB of Income Tax Act in case of a person referred to in subclause B of Rule 1 of 6G. Okay, now what is this rule? Basically, 6G. So if you go for the Rule 6G, okay, now 6G says that if a person not being referred in 6A, 61A, that person will fall under category of 61B. Okay, I'll explain over here. So it is applicable to persons or to person who carries business and profession, okay, but not covered under Rule 6G1A. What is 6G1A? So 6G1A talks about person who carries business and profession, okay, and who is required by or under any law. Basically, when I say any law, that is any other law other than Income Tax Act, to get his accounts audited. That is your Rule 6G1A. And for that, the form that is prescribed under Rule 6G1A, it is Form 3CA. That is we just now saw over here. See, 6G1A. So if a person is not covered by 6G1A, means a person who is not required to get his account audited any under law, for that particular person, Form 3CB are applicable, means all other cases, all other cases. Okay. So here 6G1B says that it is applicable to all other cases who are not required to get their accounts audited. Any other law. And if you see the wordings, it says that IOV examined the balance sheet as on this particular date, let's say 31/3/23, and the profit and loss account or income expenditure as may be applicable for beginning from 1/4/22 to 31/3/23, attach herewith of, let's say, XYZ. Now I cannot write limited because they will fall under the case of 6G1A. So I can call it XYZ as a proprietorship firm. Okay. Messrs XYZ proprietorship firm. Or you can write, for example, of Mr. X. Perfectly fine. Okay. Name and address is required to be given accordingly. with a permanent account number. Okay, whatever it is. Then I recertify the balance sheet, P&L or income expenditure as may be, are in agreement with the books of account maintained at the head office at this particular location and these branches. So, kind of giving assurance over the balance sheet and profit and loss account. I will report the following observation, comment, and discrepancy, inconsistency, if any, and subject to the above. So, here observations are there, or in other words, I will say qualifications. And subject to the qualifications, I we have obtained all information and explanation which is necessary or best to our knowledge or belief necessary for the purpose of audit. In our opinion, proper books of accounts has been kept at the head office or branches. Okay. So far as appears to be the examination, in our opinion and best of our information, according to the explanation given to us, read with the notes, give the true and fair view. Here the term true and fair view is used with respect to the accounts. Again, so the term true and fair is used with respect to the accounts. Okay. So for the accounts, we are giving reasonable assurance. But again, when we come to the form 3CD, we are saying true and correct. So particulars given in form 3CD have to be true and correct. Kind of a absolute assurance that we need to provide. And we are saying true and fair view with respect to balance sheet, state of the affairs, profit and loss account for that year ended dated. So accounts, we are giving true and fair view. But for particulars in form 3CD, we are giving true and correct. So for the particulars in form 3CD, you have to be absolute assurance. But for the accounts, it has to be true and fair. Which includes my balance sheet and P&L. It has to be reasonable assurance that is true and fair. Any doubt till now? Any doubt? And then you have the observations over here with respect to form 3CD. And you have a date sign place with membership number, FRN, and UDIN. So this is form 3CB. Any doubts till now? Any doubts? No? No doubts? Okay. So now we understood the difference between form 3CA and 3CB with respect to, rules 6G. Okay. But in form 3CA and 3CB, we saw something with respect to true and correct particulars in form 3CD. Okay. So again, that comes from the requirement, again comes from the rule 6G only. Okay. That is rule 6G2 talks about that are the particulars which are required to be furnished under section 44AB shall be in form 3CD. Okay. So form 3CD is prescribed by rule 6G. Now, if the particulars are required to be true and correct, then we need to carry audit in such a way that we get all the required details, and we need to comply with the level of assurance, kind of absolute, okay, assurance that we need to provide with respect to particulars of form 3CD. And for that, we need to understand what are the details which are required by each of the clause over there. Okay. What are the details which are required by each of the clause under form 3CD, clause by clause, and how we can get or audit the details which are reported under form 3CD. Okay. So form 3CD is applicable in both cases, whether corporate or whether any other type of assessee. Okay. Now, while going through the form 3CD, we will understand few things before we go. Okay. That is, form 3CD is divided in two parts, part A, part B. Okay. Let's go and see the form 3CD itself. And I will go clause here, and I will go then what we can do to provide that details in that particular form, or how to audit the details, and how to verify those details. We will have a detailed discussion on that. But as per section 44AB, the assessee is required to get his account audited by an accountant before the specified date, and furnish by that date a report of such audit in prescribed form, duly signed and verified by the accountant. Okay. So this is that particular statement which is required to be furnished under section 44AB of Income Tax Act under rule 6G2. Okay. Now, what is let's understand this form 3CD. Okay, part A. Basically, when we talk about part A, it's pretty simple. Okay, it's kind of the details with respect to the assessee itself, information, basic information, I call it. In part A, which goes with the name of assessee, address, PAN, okay, whether assessee is liable to pay indirect tax, excise duty, service tax, sales tax, goods service tax, custom duty, okay, status, previous year, assessment year, and indicative of relevant clause under which section 44A of section 44AB, under which the audit is being conducted. And we have a 8A also. Now, whether assessee is opted for the taxation under section 115BA, BAA, BAB, BAC, that's a new regime kind of, okay, or concessional rates. But if I talk about these particular clauses, you might see, okay, it's pretty simple. Like, what is the difficulty over here? I'll tell you the difficulty, clause by clause. Now, Let's talk about simple clause, name of the assessee. Okay, simple clause, name of the assessee. Clause 1. Just a minute. So let's go for the clause 1. That is name of assessee. I'll tell you where the things are complicated. Whether the name as per pen, name as per, trademark, registration, or trade name basically. Okay. Then in case of change of name, like for example, merger and acquisitions, what name you will refer over here? What name you will refer over here? Let's say during the year, this merger acquisition happened. Or for example, company applied for the change in name. What you will do? Name as PAN, name as trade name, registration, trademark registration or a trade name, name of, if there's a change of name, what you will do? Hypothetical example, take it Zomato. Should I write the name as a Zomato or name what is given in the PAN, name which is there in the, annual report or, MCA records? What name should I take? So there could be multiple names. What you will take as a name? Come on, guys. What you will take as a name? Name of the assessee. I'm just talking about simple one clause, name of the assessee. If you have a different trade name, okay, then the name of the company, let's say for example, Paytm. Okay, let's say Paytm has a different name. Let's say hypothetical, we understand an example. Okay, Paytm has a different name, company name. In that case, what you will do? Which name you will refer over here? Anyone? Any example? Any answers? I'm giving an example. Okay, Paytm, but the company name is 197 Communications Limited. Two different names are there. Should I write Paytm, which is known in the market, or 197 Communications Limited? So usually when you have a different trade name, in this case, you need to report it both. So the name which are given, like, in the specified in the PAN, that is also required to be given. Plus, if you have a trade name, that is also required to be given. I will give you both. 197 Communications Limited bracket Paytm, or trade name Paytm. If particular tax audit is carried out for a particular branch, then the name of the branch is required to be given. In case of a change of the name during the year, or company applied for the change in the name during the year, so in that case, whatever name was there at the end of, okay, at the end of financial year should be taken. Okay, should be taken. But again, the name change criteria, the name change details should be appropriately mentioned when you are filling the form name of the assessee. If there is a change in name, you need to known as, formally known as, okay, this particular entity. Now that the name has changed. Clause number 2, we have with respect to address. Again, we think it's pretty simple. But which address we are required to give? Which address we are required to give? Branch, head office, plant, warehouse. Okay. Let's say, for example, register office is different than head office. Sometimes you have corporate office or head office somewhere else, but the registered office is something else. Which address you will report? What if about there is a change in address during the financial year? So part financial year another address, part financial year another address. What you will do with the address? Which address you will report? So in case of address, okay, if a company, I will use MCA records for the address. Okay, what MCA records are, specifying with respect to the address. In case of a company, registered office should be the MCA record address. You can verify and you can report that. For other cases, let's say, other assessee, you can go for address which is there in income tax records. Okay. For example, it could be with respect to PAN related address for the PAN, or address given for the head office, or whatever is there. If there's a change of address during the year, okay, if there's a change of address during the year, the address communicated, okay, should be same as on date of signing. Means whatever address is there on the date of signing of report, of audit report, that address should be communicated in case of change. PAN is pretty much clear with respect to clause 3. See, if I talk about PAN, clause 3, it's a PAN of assessee, that's it. PAN Aadhaar, that is required to be given. Okay. Then comes the clause 4. Okay. What is the clause 4? Clause 4 talks about registration with registration for or liable to pay other taxes. I'll not write the full clause over here. I'll just write the summary. Liable to pay other taxes. And if I read the clause, it talks about whether the assessee is liable to pay indirect tax like excise duty, okay, service tax, excise, service tax, sales tax, goods and service tax, GST, okay, custom duty. If yes, then furnish the registration number or the GST number or any other identification number allotted for the same. So it talks about indirect taxes. So if there is any indirect tax which is where the assessee is, assessee is liable to pay, in that case, registration number or identification number of that. Now the question comes is, what if state-wise registrations are there? Uh, for example, GST, we have a state-wise registration. Okay. So what will be done in that case? And how will you verify which taxes are applicable to the particular entity? Because here all the details should be true and correct. How will I verify that the particulars which are reported under Form 3CD with respect to the indirect taxes are correct? Anyone? Can anyone tell me that how they will verify that all the particulars that are reported in the Form 3CD with respect to the indirect taxes are correct? Now we need to learn how to audit, how to report correct, how to verify whether the correct particulars are being reported or not. So it's pretty simple. Number one, if there are state-wise registrations, okay, multiple registrations, report all, first of all. Okay, now we come to the part of the audit in this clause. Okay, what we can do as a part of audit procedures. So as a part of audit, what you need to do is obtain, okay, a list of indirect taxes applicable to assessee. So obtain that particular list. Okay. Obtain copy of registration certificate to validate the particulars in Form 3CD. While doing the audit, you can also identify what kind of taxes the company is paying or the assessee is paying. So taxes paid by assessee will also give you that detail, okay, what registrations he is required to obtain. Okay, if let's say, for example, let's say import exports are there, export sale, export turnover is there. Okay, so type of operations will also, help in identifying the applicable indirect taxes. For example, basically, let's say if import export is being done, in that case, let's say there might be a IEC registration, importer exporter code. So over there you will come to know, okay, he should have importer exporter code under customs tax, and you can get that detail. Okay, then this was the clause 4 with respect to the taxes. We have clause 5, that is status. Status of the assessee, pretty much simple. Okay, you can refer to the definition of person under section 231 of the act, okay, to decide the status of the person, okay, and not to be confused with residential status. No, we are not required to quote residential status. We are required to quote status as a definition of person, individual, HUF, company, firm, AOP, BOI, whether incorporated or not, local authority, artificial judicial person, like that way. Not to be confused with residential status. Even not residential status as per any other law, like FAMA. No, we are required to give status as a definition of person. And you can ask details with respect to if it is a company, then you might have already obtained certificate of incorporation. If it is a firm, then partnership deed. These things will help you to identify the status. Clause 6, that is previous year. Again, so the previous year for which the audit is being done, the relevant previous year. Clause 7, assessment year. So assessment year relevant to the previous year. Clause 8, which talks about indication of the clause under section 44AB under which the audit is done. So the clause detail under section 44AB. That's why I discussed all the clauses above. Like I was discussing the clauses, various clauses, because you need to report under which clause you are doing the audit, whether it's 44 A, 44 ABA, ABB, ABC, then you have ABD and ABE. So what particular clause is referred over here? You need to report that clause of section 44 AB. Okay, under which the audit is required to be done. And for that, you need to understand, and that this understanding, basically, as a part of audit, this understanding is also documented in your engagement letter. Okay, before start of the engagement itself, we understand why we are doing that particular engagement, and the same is documented in your engagement letter also. Okay, now clause 8A, that is a new clause which has came uh, for the I will say concessional rate or the new regime. If the assessee is opting for concessional rate or new regime, okay, then you need to provide the details for that. Okay. So assessee can opt based on the certain section, based on these sections. If you see the requirement, it says that whether the assessee has opted for the taxation under these particular sections. So you need to provide whether the assessee has opted or not. Okay. And if with effect from AY, 24-25, tax for the individual tax is required to be paid for the individual's HUF and BOF AOPs under section 115 BAC. Okay, unless and until the option is being exercised to shift out from the default scheme. So for that purpose, now let's say whether this has been opted or not, how will you verify that? How will you verify this particular thing? So it's pretty much same. Like you can, if I talk about audit of this particular clause, what you can do is refer to the income tax return, whether in a draft stage or a final stage, which is available, which the assessee will be filing. So you can draw and reference from the income tax return. If it is an individual, okay, then whether form 10 IEA, okay, whether form 10 IEA has been furnished, okay, that is an option to shift out from the default tax scheme under section 115 BAC as per the required provision. So whether 10 form 10 IEA is furnished, so you can check that also. Okay, from there you can draw a reference. If the form is not applicable or is not filled, then you can obtain written representation from assessee whether he is going to, okay, uh, you know, opt for the concessional scheme or not. And the same when you are obtaining written representation and you are solely relying on that. Then state this fact in your form 3CA, 3CB, okay, 3CA, 3CB, that is in over here, para 5. The particulars which are there, you need to state over here. If solely relying on written representation, or in case of form 3CB, you have a para 5 over here. You need to prescribe, you need to specify over there. That was part A with respect to form 3CD. Any doubts till now? Any doubts with respect to part A? We have covered our part A of form 3CD. Now it might have given you a clarity that simple name, address, and other details, how much complex that can be, and how much the way we need to audit them, what details we need to obtain in order to audit them. Any doubt? No? If no further doubts, then let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Okay, let's take a quick 10-minute break. Let's continue. Okay. So we discussed about first 9 clause, that is 128A. Okay. Now let's move to the main part, that's the part B of Form 3CD. Okay. That's the critical information that is required to be given under Form 3CD. Okay. If you have any doubts during the particular, again, I'll repeat, if you have any doubts at any point in time, you write it down. But, if I take a pause in between, discussion between the clauses or before end of the lecture, whenever I will get time, I'll take up your doubt. So don't worry, your doubts are reaching to me. Okay. But I will be able to take up once I'll take up either, complete one particular topic or one particular clause, or if some clause is going on which is very pretty long, I may take up at the end of the lecture. Okay. So let's continue the discussion. Now, as I was discussing about, basically, part B. Part B is a very important part and contains a lot of details, lot of clauses that we need to understand. Okay. And it is again divided into sub clauses with respect to that. So let's say clause 9A. If a firm or association of person, if the assessee type or status is a firm or association of person, indicate the name of partners, member, their profit sharing ratios. Okay. So this is applicable for firm and association of person. Clause 9A, because there are multiple clauses with respect to your clause 9, 9A, 9B, 10A, 10B, 11A, 11B, C, like this way. So the first one is, if firm or association, then indicate their partner's name and profit sharing ratio. If partnership or association of persons, the way it is there, then partner's name, member's name, or profit sharing. You need to provide partners or member's name and profit sharing. Now the question comes over here is that when we talk about profit sharing, so do we need to provide for all the partners? So yes, for all partners, not majority of the partners. Okay. Another question comes is that what if someone is in, beneficial capacity, or is a beneficial partner or member, and someone is acting on a representative capacity. If a partner is acting on a representative capacity, then name of beneficial partner should be stated, not the representative partner. Okay. So name of the beneficial partner should be stated, not the representative partner. Now, how you will audit these things? So, for example, you can obtain partnership deed to verify the shares and the number of partners. Okay. If AOP has any document, instrument, AOP instrument, any form of instrument may be there for the AOP. That AOP document or instrument, you need to inquire for supplementary or supplementary deeds. Some kind of, supplementary partnership deeds are there sometimes. For some addition or change in the partner. Okay. Make sure you obtain certified copies of these documents and deeds. Okay. There could be a scenario where you are not able to ascertain, the members or shares of members, or you are not able to identify the members in a particular partnership, association of person, or their share is not ascertainable. Okay. if shares of members is a certain unascertainable or are not ascertainable, okay, due to any of the situation, then state the same, okay, in observations or in those particular paragraph, okay, that I showed you earlier, okay, with the reason like why you are not able to ascertain. Now comes to the part B for this. So earlier we had 9A, now I'm talking about 9B. Okay, what 9B talks about? 9B talks about if there is any change, okay, if there is any change in the partners, members, their profit sharing ratio since the last date of the preceding year, the particulars of the change. Okay, you need to provide particulars of change. Okay, for that, already you have obtained supplementary deeds. So the supplementary deeds will help you to identify those changes. So what you need to provide particulars of change. Now the question is how that particulars of change should be reported in Form 3CD. Okay. So you may record, for example, let's say partner, whatever partner it is, earlier ratio, current ratio, okay, with effect from date. So in this tabular format, the information can be provided, okay, under this particular clause. Let's say Mr. X, earlier ratio was 33%, now it is 50%, and this is with effect from 1/4/23. Mr. Y, earlier was 50%, now it is 33%, and that is effect from 1/4/23. And during the year, if any change is there, that change should be reported in this particular format. Okay. For that, you may verify through supplementary deeds, and that we already discussed. Clear? Now, next is clause 10A. What is clause 10A? Clause 10A talks about nature of the business or profession. If more than one business or profession is carried on during the previous year, nature of every business and profession. Okay. So, you need to provide nature of business and profession. Including all business and profession if more than one are there. Okay. So you need to select code wise. So whenever you will go to fill that particular form in utility, you will see codes, activity codes are given. You need to select appropriate activity codes for that. Okay. So which includes basically sector, subsector, then activity code, nature of business. So like this way, the sections are there when you will go and fill the utility, when you will try to submit in the form of utility or online form. Okay, you need to provide that detail, sector wise, code wise, subsector wise. All these things are required to be given. And as a part of audit, how will you verify this thing? Simple. If I talk about, you need to understand the entity and its environment. Remember SA 315 you might have read in audit. You need to apply that essay over here to understand the nature of business and profession. Clear? Clause 10b. What it says, is there any change in the nature of the business and profession? Any change in the nature of business and profession and particulars of such change? Again, change should be material. Okay. Change in business and profession. Now, any material change we are required to report over here. Okay. It should not be the case that, okay, company started some small, non-material activity and you count as a change. So any material change should be reported or set out over here. The purpose of the clause is to identify, or the material change should be reported. Let's kind of change in the principal line of the business. So for that, what you can do basically, if I talk about audit of this particular scenario, it's pretty simple. You need to check minutes of meeting, of board meetings. Okay, you can verify if there is any sale of any unit during the year. Okay, because if there is a sale of any unit or business, that business might have discontinued, so that will count for a change. Okay, if there is a start of a new business, then you can check for new investment in kind of fixed asset or whole unit. So it will show you, okay, there is a change. Okay, new unit or new business has been started. Okay. For example, if there is a reorganization or reconstruction of a similar line of activity, means expansion. Okay. Now, if there is an expansion of a particular business, that is not counted as a change. Expansion of existing business line, or you can say type. For example, expansion of any business line or type that will not be reported. And if I give you example, that is, earlier the capacity was, let's say, 1,000 vehicles for a company. Okay. Now after expansion, okay, expansion occurred and the new capacity is, let's say, 1,500 vehicles per day or per month, whatever it is. So this kind of expansion of existing business line will not form part of this change in business. So change in business means there has been, either change with respect to the codes that you are reporting over here. Okay, if there is any change in with respect to these codes, that change is required to be reported. With respect to codes. Okay. Next clause is 11A. 11A, what it talks about? 11A talks about whether books of accounts are prescribed under section 44AA. If yes, then the list of books accounts so prescribed. Can anyone tell me what books of accounts are there under section 44AA? What 44 AA prescribes which books of account? Anyone? Anyone? So rule 6F prescribes books of account under section 44 AA. So rule 6F F or section 212A, okay, they specify the books of account, books of accounts under section 44 AA. Okay, so need to refer section 212A plus you need to refer rule 6F with respect to 44 AA. Okay, to identify the books of accounts that are required to be maintained by a person, and then you need to verify whether those books of accounts have been maintained or not, or whether those books of accounts are prescribed based on the condition, and if yes, then whether those books of accounts are maintained or not. Mansha, no, they are not the HSN, but they are the difference business code which are applicable for the income tax purpose. Basically they are aligned to that, but if you go to the codes which are there for the income tax purpose, you will see small changes if I'm not wrong, but over and all, they are kind of on a similar line, but you need to check for those codes with respect to the codes which are prescribed under income tax act for the ITR forms basically. Okay, now clause 11B. What 11B says? That list of books of account maintained and address at which they are kept. So list of books of account maintained. So A talks about which are prescribed, the list which is prescribed. Okay. Now out of that list, which list is maintained? Now, usually if earlier there were physical books, so that was perfectly fine. Okay. But think about the scenario where the books are nowadays are kept on server in electronic format or they are on a cloud. How will you verify that? How will you report that address? That is a very important question nowadays has become. Plus, you need to specify which format they are maintained, whether in an electronic format or in a hard copy. So basically what happens is if they are on cloud, if books are on cloud, okay, Then IP address or unique, any unique address should be reported where those books can be accessed, or location of server. Now, in some cases, disclosing the IP address may refer to cybersecurity risk. That's why for this purpose, there are different IP address which are created, or which are kept as a gateway point for the server. Okay, so in that case, you need to understand what is a unique address. That's why I mentioned IP address and unique address both, because you need to understand, if you provide the system IP address or the cloud IP address, then there could be a chance of cybersecurity risk. Again, that's why a unique address can be given, which is unique and specific to your books of account. Okay, and which is also provided to the auditor. Again, you need to obtain these details from the assessee. Okay, and you need to verify accordingly after obtaining these details from the assessee. You also need to provide type in which the books are maintained. For example, you can use you can either specify hard copies, physical format, or electronic format. Okay, now A talks about books prescribed under 44AA. B talks about what books are maintained. And now comes the clause C, which talks about out of these books, basically what has been examined. So it talks about relevant documents that have been examined. Books of accounts and relevant documents that have been examined by the accountant. A talks about what is the prescribed one, B talks about what are the maintained one, and C talks about out of the maintained one what you have examined. So it could be a scenario that, okay, these are prescribed but not maintained but not examined. So this way it will work. Okay, so prescribed, out of that there might be some maintained, some not, and out of these maintained, some might be examined and some might not have been produced for examination. If some are not produced for examination, then state the fact in observation. Okay, so let's say, for example, there were prescribed, hypothetical example, let's say there were prescribed 10 books, out of which they have only maintained 9. Okay, and out of which you could only examine 8 and one was not given to you. That's an observation which requires a disclosure or qualification in form 3CB or 3CA. So that is still for clause 11C. So we discussed 9, 10 and 11. Any doubt till now? Any doubt? Any doubt, guys? No? Shall we proceed further? Okay. Clause 12. Okay. What it says that whether the profit and loss account includes any profit and gain assessable on the presumptive basis. If yes, indicate the amount relevant to the section. A, D, A, E, A, F, B, B, double B, double B, A, triple B, chapter 12G, first schedule of any other relevant section. So, if any of the profit which is calculated on the presumptive basis under these sections, if that forms part of your profit and loss account, then you need to specify the same. Okay. Now, very important question with respect to this part. I'll just give me a minute. Clause 12. Okay. P&L includes presumptive profit. If that is so, then you need to identify first whether that presumptive profit is part of P&L or not. That you will anyways will do, in case when you will perform the audit of the P&L. Okay. But in case you have not performed the audit of the P&L, you might need to ask additional details. Okay. So with respect to the audit point, you need to ask, okay, or basically inquire for, any profit assessable on presumptive basis. Okay. If yes, then where that profit is included in P&L account, because it shouldn't happen that that is not part of P&L. Usually wherever the assessee opts for the presumptive taxation, okay, it is considered or it is advisable for the assessee to maintain some basic records with respect to the turnover, receipts, on the basis of which they declare the presumptive income. So for that, they need to maintain some basic records with respect to the total turnover. Otherwise, how they can calculate the presumptive profit? And in the P&L, where that presumptive profit has been added to, because you don't have the proper records, so it will not form part of the turnover. It will not be in the turnover. It might not be there, other expenses somewhere. They might have included in some other category as a part of as a profit. So where they have added, so you need to ask that profit where it is included, where that profit is included in the P&L, and you need to ask whether there is any profit which is assessable on the presumptive basis under these sections. Okay, then only you can report whether yes or no. Then you have clause 13. Now, clause 13 basically talks about method of accounting employed in the previous year. Okay. I will just go through 13 ABC first. Okay. And then we discuss further. 13A talks about method of accounting employed. B talks about if there is any change in the method of accounting employed versus which was employed in immediately preceding previous year. So whether there is any change, A talks about method of accounting, B talks about is there any change, and C talks about if answer to the B is yes, then give the details of change. Okay, so ABC works together, kind of, you can say. A talks about method of accounting, B talks about whether any change, and C talks about if yes, if change, then the impact of change. Okay, so this is ABC. Now, method of accounting basically, you know, given for the under section 145 of the Income Tax Act. Section 145 provides that the income chargeable under the head of profit and gains of business profession or income from other sources must be computed in accordance with either cash or mercantile system which is regularly employed. Okay, hybrid is not permitted. So hybrid, you cannot, mixture of cash and mercantile is not permitted. Okay. However, the assessee may opt cash system for one business and mercantile for other type of business. That is perfectly fine. But choice of accounting should be, accounting method should be followed consistently. Okay. So that is section 145 of the Income Tax Act, which provides method of accounting. Now, as a part of audit, when I talk about statutory audit, you verify. In case of a company, okay, you are required to keep books of account on an accrual basis under section 128 of the Companies Act. Okay. You are required to follow accounting standards or Ind AS as the case may be. Okay. There are accounting standards also prescribed for the non-corporate entities, which are they are required to follow. Now, if an entity is required to follow accounting standard or Ind AS, okay, and if the entity is following accrual system and if there is any change in that, we need to report that change. So for that, you need to apply reasonable checks. In case of audit of this, what do you need to do? Apply reasonable checks, okay, to ascertain change. Now, for example, if you are doing audit, so in audit, you any which way will confirm this particular part. But if you are, it's the case where there is an audit and has been done by some other person. That is the case of Form 3CA. You are the tax auditor. So you need to perform reasonable checks. So you can check on the sample basis. Okay. Whether the method of accounting which is followed is accrual or cash, whatever there it was earlier. So you can do sample test for that. And you can then, basis of that, you can confirm. Plus, you can obtain written representation. Okay. So with respect to what method of accounting has been followed. Now coming to the part of change. Okay. We need to understand that change in accounting policy or change in estimate is not change in method of accounting. Okay. So change in accounting policy or change in estimate is not change in method of accounting. No. Change in method of accounting is different. Change in method of accounting is respect to the cash accrual that we are talking about change in method of accounting. And when there is a change, you need to quantify the impact, effect of the change on profit and loss with increase and decrease. So, as a part of the audit, okay, you need to verify, okay, you need to verify the impact of change on profit. And when I talk about profit, okay, you can do only by verifying each element of profit. Just a minute. Okay. So you can verify the change by verifying each element of profit, basically. Clear? Any doubt till now? Any doubt? Okay. If no doubts, let's proceed further. So that was 3A, 3B, and 3C. Okay. Now let's understand further. Let's understand 3D. And you already have a format with respect to 3C, that is serial number, particulars, increase in profits, decrease in profit. And when I talk about particular, that's an element of P&L. Okay. Because of such change. Now D. What D says, that is any adjustment is required to be made to the profit and loss account for complying with the provisions of income computation and disclosure standards notified under section 145(2). So you need to report whether any change, okay, or any adjustment is required to be made. Okay. So ICDS was specified under section 145(2). Okay. They are required to be followed by all assessees who are required to get their books of account audited following the mercantile system of accounting. Okay. And they are required to, okay, use for the purpose of computation of income chargeable under income tax under the head of profession gains, profit and gains from business and profession, or IFOS, that is income from other sources. Okay. Now this particular clause requires the auditor to state whether any adjustment is required to be made or not. Okay, to the profit and loss for complying with the ICDS. Okay, and if yes, then such adjustment is required to be reported separately, and that is should be reported in absolute terms with increase and decrease in the profit and net impact on the profit. Just a minute. Just a minute. I think there is some technical glitch. Give me a minute. Okay. So clause 13D. Okay. 13D, whether any adjustment is required to be made to the profit and loss for complying ICDS. Adjustment to profit and loss for complying ICDS. Now, if yes, then you need to provide the increase or decrease. Okay. And net impact with absolute terms. For that, how will you identify this particular thing? How will I identify that, some impact is there? Okay. How will you identify whether any adjustment is required to be made? Yes or no? Now, for the purpose of clause D, okay, as an auditor, I'm required to obtain draft computation. Okay. So I can obtain, as an auditor, I can obtain draft computation. Okay. And draft disclosures under ICDS. Okay. And based on that, I can say whether adjustment is required to be made or not. So I can accordingly reply yes or no in this particular scenario. Okay. Now, if you see clause E, if the answer to the D is in affirmative, then give the details of such adjustment, ICDS wise, increase, decrease, and the net effect that I was talking about. So in clause D, you are required to provide yes or no. So that is required to be increase, decrease, and the net impact will go under clause E. Clause 13E. But under clause D, you are required to provide yes or no. Yes or no. Okay. So clause E requires to report increase, decrease, and the net impact ICDS wise, whereas clause D requires whether any adjustment is required to be made yes or no. Also, if you talk about with respect to the documentation, you need there is a draft check. There is a checklist also, which is issued by what you can say as a part of ICAI for their in under their initiative. Also, there is a technical guide on the ICDS issued by ICAI in July 17. You can refer that also. Plus, as a part of working paper or file of ICDS, checklist should be prepared and maintained along with the competition. Any doubts? Any doubts till now? Any doubt? Now, if no doubt, let's proceed further and look for clause F, basically. Under clause 13F. So, if you talk about clause 13F, it shows that a disclosure as per ICDS. It talks about the disclosures which are required to be made as per the ICDS. So, you need to ascertain what disclosures are required to be made and whether appropriate disclosures are made or not. Disclosures as per ICDS. So auditor needs to verify appropriate disclosures are made or not under ICDS. Okay. And if not, then they need to qualify and specify in Form 3C or 3CB. Any doubt till now? Any doubt? Any doubt, guys? Okay. No doubts. Let's proceed further. Let's see few more clauses for today. Okay. Let's say clause 14. What is clause 14? Method of valuation of closing stock employed in the previous year. Method of valuation of closing stock employed in the previous year. And 14B talks about deviation from the method of valuation of prescribed under 145A and effect thereof. So serial number, particulars, increase in profit and decrease in profit. Two things. One, method of valuation of closing stock. And in case of deviation from the valuation prescribed under 145A, the effect thereof on profit and loss. Method of valuation of closing stock. Now, what is the method of valuation of closing stock? Which is cost or market value or net realizable value. Okay. So whether there is a change in the basis of determining the cost, market value or net realizable value basis of the method of valuation of closing stock at the end of the year. Okay. Accordingly, we need to understand what is the method of valuation of closing stock and we need to report. As a part of audit, we need to obtain details, okay, like closing inventory, listing, which also provides value of closing inventory. Okay, from there you can identify method of valuation. Okay, so closing inventory list, value of closing inventory, method of valuation can be obtained from these inventory reports. In case of ERP, let's say for example, if you're auditing an entity which is maintaining their accounts in SAP, Oracle, okay, over there you will easily identify, easily get inventory reports. So you can use those reports which are extracted from the SAP, Oracle, you can say BAN, iScala, a lot of ERPs are there. Okay. So you can use reports extracted from those ERPs and you can easily identify the method of valuation in these reports. Now, if I talk about clause B over here, clause B was talks about in case of a deviation from the method which is prescribed under section 145A and effect of thereof. Okay. So for that, you need to review the method adopted as a part of audit, review method adopted versus method under section 145A. Okay. You need to also check whether the amount of the value of closing stock includes any duty, cess, okay, tax paid by the assessee to bring the goods to the place of its location or not, how the valuation is being done, what are the components of the valuation. Okay, you need to verify all these things. And and if you refer, there could be two different things over here. For example, the method of valuation of closing stock, it is specified as a closing stock. Okay. In most of the companies and in most of the entities, you may find that is you have raw materials, WIP, finished goods, spares, packing materials, okay, as a part of your closing stock. So you need to verify category wise what is the method of valuation adopted, and specifically for the WIP. WIP being a very critical area. Any doubt? Uh, for those who have worked upon the SAP environment, they know that for the raw material, okay, they can obtain basically MD4 report, MD04 in SAP, okay, or they can obtain a material document list in MB51, okay, or they can use MB5S, that is GRIR clearing account. So for these for SAP, you can use this particular document, okay, or these reports wherein to verify basically the details of the stock. So some people might use, stock list, for example, MB5L in SAP. So there are different reports available for different purpose. You can verify those reports, and based on that, you can, easily identify the valuation method adopted. Any doubt till now? Any doubt till clause 14B? Any doubt? No? No doubts? Okay. As a part of what you are required to do before next lecture, which is tomorrow. Before next lecture, tomorrow, okay, you have to go through the study material, that is for sure. Refer the study material for the rest of the clauses. Revise what we have discussed today. Two things. One, go through rest of the clauses which are there, and we have to cover a lot of clauses tomorrow. So, I will be explaining how to audit these clauses rather than going more detail into the applicable of the income tax section. Okay. So rather than focusing on the relevant provision of the Income Tax Act, we will focus more on the how to audit the particulars which are disclosed in these clauses. Number two, I want you guys to revise what we have gone through today. Okay. So whatever we discussed today with respect to clause 14 till clause 14, or before that with respect to Form 3CA, 3CBD, some items with respect to the sales turnover, gross receipt, or you could say, definition of accountant, section 44AB, or some, background about this. I want you guys to revise that particular thing and come up with your doubts in the next lecture. Okay. So please read the study material. There is no alternative of that. No alternative. Read the study material. It's well enough, well documented. Everything is given. I don't see any, further reading required other than the study material. Trust me. Okay. If no further doubts, guys, I suggest we keep the session till here. I'll see you in the next section tomorrow. Okay. And we'll discuss further. Okay. Thank you. Thank you, everyone. Have a nice day. Thank you.